Welcome to Tradier's The Trader's Edge. I'm Iuorio. That's Iaccino. I'm laughing because the best producer and the best guy and the nicest person, Max, said there was some delay, and he said, "Thank you for your patience." If you know Bobby and I, we display no patience ever at any time. So when someone says that to me on the phone, like, "Thank you for your patience," what patience? It's not what I do.
No patience at all.
Yes, and I'm glad of that. It's gotten me some good places. It's gotten me beat up a lot too. But anyway, here we are. How are you guys? It is New Year's Eve. Thank you guys for joining us live. This is Tradier's Trader's Edge. I'm Iuorio. That's Bob Iaccino. You can also join us at unfilteredinvestor.com, where we give technical breakdowns of markets on all different time frames. Bobby, so we've had a couple weekdays coming into the end of the year. Does that mean anything to you, or is just low volume profit taking the end of the year?
Not really. I did a little bit of research and then I piggybacked off some other research from a firm. And it basically, the Santa Claus rally does have a loose relationship to a poor January, and a poor January has a loose relationship to the results over the year. The opposite is much more reliable. In other words, the Santa Claus rally produces a good first week of January, produces a good month of January, which produces a good year. I suspect there's no real value to that statistic at all. I will say this: I got a New Year's resolution. You want to hear it, and then you want to judge it?
Sure, I'm going to. I'm going to judge it. I judge.
Yeah, judge it, and then give me the odds you think I'll stick to it. I've started it today. A New Year's resolution is to only wear tight black T-shirts about 85% of the time, as opposed to 99% of the time. What do you think?
I think it's impossible. I think it can't work. I would just wear tight short sleeve T-shirts all the time too, except I live in a climate that gets a little colder, which, by the way, I think you're going to be able to do part of it, but I don't think you're going to get down to 85%. The office that I have in my basement now that's just been built and finished, which is wonderful, the heating ducts run over it. So no matter what temperature is outside, which is 15 degrees, it's hotter than hell down here. So if I start to break a sweat, I apologize, people. Let's get on with the show. We have one of our favorite guests and a friend for several years, been with us a lot of times. He is the president and CEO of Deer Point Macro. He is Tradier. Let's bring him on. So here, my friend, first of all, that South Carolina, let's read it again. South Carolina man who identifies as a deer accidentally shot by hunters. I love that. That is fantastic and very much appreciated.
Why is that like the Babylon Bee? Or I feel like that actually happened, but who the hell knows these days?
Yeah. So why are you called Deer Point Macro? Are you a big deer hunter or no?
No, funny enough, not a big deer hunter, mostly duck and pheasant, actually. But I just felt like deer kind of, had a better ring to it than like Duck Point or something,
Well, it's funny that you mentioned the bird hunting, because I have some relatives up Wisconsin who are big hunters, and I've never done it before, but I did ask them at Christmas, and we've kind of set something up for March or April at his hunt club that I'm going to go and be introduced to deer hunting. Do you love it? Do you like it? Is it a big part of your life?
Yeah, it's a pretty big part of my life. I mean, we go hunting pretty often. Me and my dad go down to South Georgia. We go pheasant hunting, quail hunting a good bit. So, yeah, I mean, it's something that we grew up doing. So
that's awesome.
It's funny. I could just never see myself shooting an animal. I could shoot a person. I know that. I'm positive of that.
But even a bird you couldn't shoot?
I've shot a bird, and that's what scarred me for life. One time, me and my brother were playing with this little BB gun in our backyard. We were shooting at robins in the backyard, and I shot one right as my dad came home, and it wasn't dead. And he grabbed me by the nape of the neck, and he goes, "Now go kill it." Right? And then he made me put it like right up to the head and shoot it because it was suffering with a little BB gun. And I just haven't been able. I eat the shit out of meat, but I just haven't been able to kill it myself.
No, I know. I get that. That would be tough.
I think hunters have the right idea. Those are the right environmentalists, in my view. But
I just did a radio show in Chicago, and I had a climate scientist on who happened to be my daughter, and we did talk about the crossover of environment between the two parties. And I think that duck hunters, deer hunters, if you want to find people who care a lot about the environment, that and still vote for the right, though, that's the crossover. You agree Tradier?
Yeah, I would agree with that.
Yeah, no doubt. Okay, so I just asked Bobby the question. We've had some weakness. We've kind of limped into the end of the year. We are recording this. Most people are watching it live, I know, but recording on a New Year's Day. Do you think there's any big deal, the fact that we can't get out of our own way this week, or is it just low volume blip?
Yeah, I think it was low volume blip. Even this morning, just watching futures, it's just super thin. So I think more people are kind of optimistic going into 2026, and I just kind of think that there's just a bit of exhaustion. So I think rolling into the new year, we'll start to see volumes pick back up.
Okay, can we go from an economic standpoint first? And Bobby, I want you to answer this question too, because Scott Shellady, Larry Kudlow, Stephen Moore, I've had conversations all with them within the last few days. I was worried more about the labor market being soft and potentially getting softer, particularly from companies for the promise of AI, which is not exactly the delivery of AI, but the promise of AI slowing hiring. They are all convinced that deregulation, these big tax cuts that are coming, AI will even potentially slow down inflation because of its productivity gains. And they think 2026 is going to be this wonderful economic year. Griff, what do you think? Dear, Tahir, Dear, Griff, whatever you, I'll call you many different names. Go.
Whichever one, yeah. I actually don't think that AI is going to be like the kind of productivity enhancer that people think it is. I know that that's a bit of a hot take, but just like anecdotal, like I even tried to ask ChatGPT a few days ago, like give me the rundown of the Joshua Paul fight, and it like gaslit me and was like, this fight never happened. And I was like, I was sending it photos of like ESPN, and it was just like sticking to its guns that like it had been discussed, but it hadn't happened. And then finally, I forgot exactly what I sent it, but I sent it something, and then it was like, "Oh, sorry, I stand corrected," after
Yeah.
gaslighting me for like 4 minutes. So,
I'm sorry to interrupt you, dear, but I actually did that about the Trump attempted assassination when he got shot in the ear. It was
yeah,
like 3 weeks later, and it's like there's no evidence that Trump's been shot.
yeah.
Wow. Yeah.
Yeah, so go ahead. It was the same. Timmy, I think I was sending you screenshots of
Yeah,
that.
yeah.
Go ahead.
Yeah.
Sorry
And
to
so,
interrupt you.
no, you're fine. There was a guy, I can't remember his name because I wish I could quote him because he did very good research, but he's a physicist, and he was essentially going over some stuff with AI, like very basic mathematics, and it wasn't doing very well. And then he did some further in-depth research and actually found, I think it was like 60% of the prompts for AI are actually pulled from Wikipedia, and then like 15% is actually pulled from Reddit. Um, so it's kind of a hit or miss. So I'm not all that
Yeah.
enthusiastic that
But the
AI is
part
going to be
about
the,
the labor market, which I said the
yeah,
promise of AI, of these companies who have just as enthusiastic as the share prices have been, there is the enthusiasm for what they think it can do to their company. And I
it can
think
do.
that they're
Yeah.
slowing hiring because of it. That seems reasonable. Yes.
So, yeah, I think so. And funny enough, I actually put a chart deck together that I was going to kind of go through on this. But first, as we know, I'm having a bit of technical difficulties. But I do think that that is definitely one aspect. The more interesting thing that I have found is I actually went and I decomposed every industry in the S&P 500, and that's actually up on my Twitter. And essentially, I was looking at hiring and firing breadth for all companies in the S&P 500 by industry. And hiring is actually revamping currently. So there's actually now more hirings in the S&P than there are firings, just
Okay.
from a
That's
breadth
great
perspective.
news. Okay.
That
Good. Yeah.
that's great news. And the other interesting thing that I found was just kind of looking at, well, there has been all of these kind of discussions about, X company is laying off 15 or 20,000 employees. People are like, well, this is very bad for the job market, um, and good for margins. And so I actually put out something today where I actually went and looked at this overall, where, okay, if you start to lay off employees, what's the impact on margins? Um, and that's not really the whole story. And so if you kind of look at the tech companies, they're more in this AI aspect. When they start to lay off companies, they actually see margins increase because they're getting, capital deepening. They're seeing increases in productivity through automation and those kinds of things. And so um, I do think that there is one, job market's probably going to be okay, but two, I do think overall a lot of this kind of at least automation aspects from language models, I do think might help increase efficiency, which will help boost margins and specifically in the information technology sector. So
So I wanted to ask you, so it's actually not a hot take on this show because I agree with you, but a little bit of a twist. Here's your tweet that you were talking about, right? This is the one that
Yes.
you put up today. I'm shrinking it. I wanted to expand it. Um, so do you want to go through this before I ask you the question? You want to tell me what this chart is saying?
Yeah, so essentially, the note there is kind of how it should be theoretically. So theoretically, if you were to think, well, if you lay off, people, you should see your margins increase. You would actually expect like kind of a negative correlation, and it should be linear, at least in theory. But what I find is one, it's not linear, but I got to throw the linear trend line on there because, in macroeconomics, everything is linear. But essentially what we see is those industries, often to the right, like information and technology, those industries are extremely, they have a lot of pricing power, they have a lot of productivity, and significant amounts of capital deepening. So essentially significant amounts of capital inputs or labor inputs that increase efficiency beyond whatever the cost of that input was. And so that's essentially what we're actually seeing now. And then if you actually go back, the other chart I was talking about, the breadth, it might be like back onto my page. If you go down, I think it might be 3 or 4 charts down. Maybe below this, below that. Sorry, it's somewhere in there, but that actual labor breadth is there's rates. It might be right below this. No, maybe, sorry, 3 or 4. Sorry,
That's okay.
sorry, Bob. Just
Look, all this shows is people should follow you because look at all
yeah,
this fucking
it's
Yeah,
information.
the
this
one
is
right
good
below
stuff.
that.
I'm so glad
Is
I
this
do
it?
follow you.
So this is the graph. This is the actual industry decomposition of labor breadth in the S&P 500. So the amount of companies that are hiring and the amount of companies that are firing. So as you kind of see, we trough there, and now we're starting to tick back up. So
So what, by the way, so all this, I love all that info, but what does it point to from an investment theme for 2026?
well, I think going into 2026, the equity markets are going to be I think they're going much higher. One, I think that the BBB is going to have significant impact on that. Things like depreciation changing, I do think is going to be a net benefit for companies overall, and I do think that that's going to actually lead to higher corporate profits. I also think going into 2026, the sector that I favor the most or kind of is actually going to end up being small caps. I think that small caps are going to do significantly well. We kind of saw momentum towards this kind of the end of the year this year, but I think that there's a lot more momentum going into 2026 for small caps. So I think overall the backdrop is going to be much higher equity prices. So yeah, I think that there's no sort of worry about large caps getting exhausted, at least at this point. And I think that large caps and small caps are going to do well. I think that small caps are probably actually going to outperform slightly.
All right, so let me throw the reason I said that wasn't really a hot take is because I've said before that I think AI is actually going to help productivity, but it's further out in the distance than people think. And that I don't know. I mean, I've just seen, I use the simple AIs. I use ChatGPT, I use Grok, I use Claude, I use Perplexity. I don't actually, and you may know more to hear it. I'm not necessarily asking you, but I don't know. There's so many AIs out there now that there might be ones that are a lot better and a lot more expensive, something I probably wouldn't pay for. But I just find them all to be wrong a lot of the time. I mean, I'm arguing with
Are
AI
they
half
getting
my
more
day.
wrong over time or less wrong over time, Bob?
I don't know because like I've gotten to the point where if it's important to me, I check it. If it's not important to me, I don't. I just kind of go with whatever it says. And I even think there may be a period of time where we're relying on AI and it's doing poorly. So maybe like there's less hiring and the productivity of a particular firm goes down. I'm not sure, what that would look like. But there can be times where, I don't know. I mean, imagine like an incorrect customer service AI at one company and a human services department, for example, at Brant's. Let's say Panera goes AI and Brant's doesn't. And Panera says, well, fuck you. We're not going to change that moldy piece of bread I just bought. And they go, screw it. I'm going to Brant's for a burger. And
Yeah.
I could kind of see that happening just through my own experience. But Griffin, to hear, Do you know, do you have an idea as to what that might look like from a perspective of like when, first of all, do you agree that companies may go into it anyway, as Jim theorizes, and then realize it may not be as far ahead as it needs to start hiring people again? Does that seem strange to you, or does that seem silly?
Yeah, I mean, for me, potentially, I know that that's kind of been a lot of the discussion around layoffs is like, oh, it's because of AI. But I think a lot of these companies know that AI is probably not there yet. And also, I think that there's a lot of risk as it relates to it. So it's like, even if they start, like you said, something goes wrong or they do something incorrect, well, you're going to have to start hiring people back because you don't want to take on the reputational risk. And like, even just recently, I guess there's something called spicy grok, which is an anecdotal story, but it had been turned on in somebody's Tesla. And this like made the news, and it was saying like very inappropriate things to her 12-year-old son. And so then it's like, well, that becomes a liability for a company, right? And so that's not something that you would think humans would do. And even if a human did do it, you know who to point at, right? Because if it's like, if AI screws up, like who do you sue, right? Or who do you fire, right? Like, I mean, it's a language model, right? So it's
Right.
like much different than a person, right? If a person, curses out somebody on a, call center, like they're just going to lose their job. But if AI, goes off the rails, well,
Liability, right?
yeah, who do you go back to, right? So, yeah, I think that that's probably where we'll start to see more and more people start to come back into the workforce. And I also think that that's why AI stocks have become so exhausted. It's like, they made all of these large promises and now they've started to try to, you know, peel those back slightly. They're like, oh, well, we might have gotten a little over our
Yeah.
skis.
So the
And
share
so,
price and the enthusiasm within companies. Bobby, I didn't mean to step on you. Go.
No, it's
Yeah.
okay. That deer looks like a power forward from the 80s and 90s in the NBA.
Fantastic. Just
It
the
just,
way,
yeah,
the way he stands. It's very
like a
impressive.
grandmama, Larry Johnson. So do you think, so I did a sort of a forward look 10-minute interview on Yahoo Finance a couple days ago. And my whole idea was that the AI trade is going to slow down. I'm not looking for any sort of big crash, but I'm also not looking for 30, 40, 50% on AI stocks. I said the whole AI craze is going to die down and consumer discretionary might do better because you're still
Mhm.
going to see the rich doing well. And you might see a little bit of a slowdown to where sort of the lower middle class to the poor. I hate to use that word because it upsets people. I don't mean it as a pejorative insult. I just mean it as a word, right? The lower class on the socioeconomic ladder doesn't do as well. And so you see things like Dollar Tree doing better, for example, or you see some of the consumer discretionary stocks doing better. And then my last thing was gold stays strong, but not another 70, 80%. What was it, 85% this year or something like
If it
that?
is, we're in a serious shitload of trouble.
Yeah. So what do you think about that thesis and what's your sort of broader thesis?
No, I think that that is something that I would agree with. I put out some other work as well that kind of speaks to that, where I do think that areas like Dollar Tree, et cetera, will probably end up doing extremely well. And kind of the way that I arrived at that is if you kind of look at cumulative wage gains, like real wage gains have become deeply negative, right? Because we had 9% inflation.
Oh yeah.
Uh,
Yeah.
but we are starting to grow ourselves out of that and kind of I forecasted forward, just kind of based on current growth rates. In about second half of 2026, all the lost purchasing power of the inflation from COVID will have been recovered. So we'll be back at essentially even. And so I do think that that's going to be a huge boost to consumption. I think that commodities will do well, specifically precious metals. I'm a little bit more bearish on energy overall, it, specifically the companies. And you know, absent that, yeah, I do think that
Okay,
consumer
can we
discretion.
dive into the energy part of it too? And Bobby, you're here as well, so I want both your takes because I've just been
I am
watching
here.
the oil chart for forever. I mean, I think at some point in time, if we are talking about a pretty good economy, doesn't crude have to turn around at some point? Dear, you go first.
I don't know. I mean, I'm not like overall like the commodities expert. There's probably better people to talk about that than
Well, we
myself.
happen
But
to have one right on the call, so let's Bobby go first, and you comment on what he says. Bobby, do you think what the hell? Why has crude been getting the crap kicked out of it? And if we're talking about an economic rebound in the biggest economy in the world next year, and we already talked about the fact that jobs are starting to pick up, it doesn't stand to reason that crude's going to have a reckoning.
Yes, but the oversupply it's a 6-month build on the oversupply, right? So if we're oversupplied, we're going to be oversupplied for 6 months until it comes to a fire sale. So you literally have to have a global pickup. Okay. And I think honestly, one of the things that may drive a crude oil rebound, if we get one, is going to be geopolitical more so than the economy, because the economy moves like a cruise liner, right? It moves slow. So if we're going to get a pickup in spending, and it's something else we should talk about, no tax on tips, no tax on overtime. Does that actually, I saw one estimate that said 0.3% GDP from no tax on tips and no tax on overtime. I don't know if that's the case, but when it comes to energy, the demand for energy is elastic, but not like a purse. I mean, people are still buying crude oil, and they will buy more come vacation time if they're doing better. It's more about manufacturing. If there's a
So can you
manufacturing
give me,
pickup.
if you look at the the weekly bars, is there a level? Because again, I've been watching for this because it's a thesis of mine to wait for a spot to jump in on crude when it starts to run. So if you have the weekly bar chart up, a settlement above where on the WTI? Do you see that or no?
6087.
60.87.
Yeah, that's
That's
going to be
not
a
that
trigger.
far. Right?
That's going to be a momentum trigger. It's going to get us above the high from the week of October 20th, close to the high from the week of October 20th, and above the moving averages, the 50-week moving average. But
50
then
week.
you
Okay,
sort
that's a
out the
big deal.
200 above. And, luckily the 200-week moving average is still moving in a slight upward angle. So if it can break out above that soon, that'll actually cause a technical tailwind. But I think the oversupply is not as big as people think, because again, it's a 6-month rolling oversupply. They have to fire sale crude after 6 months. It doesn't really store that well as it gets older and older.
Interesting.
There's viscosity problems and there's refining problems, but you can store gasoline longer than that. So it's kind of a double-edged sword where you're looking at refinery utilization and then the storage of refined products versus the export of it.
So
So
61 will just go. We'll round up a little bit.
yeah, that's
Over
fine.
61 is what I'm looking for. So, Deer,
I'd be okay with that.
you just made up. You kind of made a case, and you said small caps and big caps. To me, small caps means that there's genuinely an economic resurgence, and that 4.3 we saw in the GDP, although it might not be true, it's definitely pointing to something higher. But if you look at that too, do you look at the financial sector and banks and think that there's value there?
Yes, I do. And just on the commodities aspect, again, it was something that I put up, but I essentially kind of looked at what I like to look at more so than like, EPS or PE is the return on invested capital relative to the weighted average cost of capital, right?
Okay.
And so if the return on invested capital is greater than the weighted average cost of capital, then the company generates um, returns from its invested capital. And there's a lot of economic value that's being driven there. And so what I found was, and again, that was on my Twitter page, but I essentially decomposed this by industry, was that right now the weighted average cost of capital is greater than the return on invested capital for companies in the energy space, and capex is up. And so, you know, essentially they're doing capital intensive investments despite low returns currently. Obviously, the commodity price environment, I think, what in 2025, Brent shed almost 20%, I think, roughly, give or take.
Sounds right.
And so there is some risk of value destruction there. So that is something that I'm a bit worried about. As for the financials,
Hold it though, but just for the people watching. So
yeah,
all three of us say there may be a time for energy, but that time is not now. And I included in
yes.
that as well. But back to financials. Go.
Yes, to the financials. Right now, about 2 rate cuts priced in. So I do think that the short end is probably going to come down a bit more. And overall, I think that probably the short end of the curve probably needs to come down to about 3%. So we need to shave off about 50 basis or 55 basis points from the 3 month. I don't think that the 10 year is going to move a lot. So I do think that we're going to have a much steeper curve. So right now, if the 3 month comes down to 3 and the 10 year stays around 4 to 4.15, obviously we have almost 50 basis points of additional steepening that needs to
Which
be
gets it
priced in.
back to the historical norms. The historical average is like
Historical
104.
norms. Yeah. So I think the curve needs to steepen probably another 40-ish, 50-ish basis points, which is obviously going to be great for the financials.
Bobby,
Right.
before
Steeper.
I throw you for the next question, could I bet the people who watch us know more about this shit than we do. We have the brightest audience in the world. But I will say that if there's a couple people who don't understand that last part we're talking about, I'll just give it in a thumbnail, is that bank stocks trade on the steepness of the yield curve. But theoretically, banks fund themselves in the short end and then make money with longer term loans. But that part doesn't matter. The part that matters is that the market rewards banks if the yield curve steepen or they believe it's going to steepen. That's why one of the reasons I own banks right now too, because the yield curve's been steepened. Bobby.
So I want to go to a couple of comments we got in here. So first of all, Remo is saying good afternoon to all three of us and Happy New Year. Remo's a great guy, dear. You'd love him. He's it talks to us all the time on Twitter. And he's a good long-time trading guy. And then Widge has a question on crude, which I'll speak to a little bit. And if you guys have any comments, go ahead. Widge says on crude, why are we seeing such a spread between gasoline and heating oil, diesel develop at least at the consumer level?
Great question.
So a couple of things, and I can't speak to specifics because I don't trade the other two, so I don't watch them as much. You got higher taxes on diesel, and those taxes don't fluctuate with the price of crude oil. You still have the tax on there. So crude oil might drop and you still have a high tax, primarily because it's used in commercial vehicles and it contributes to road wear. That's the reason for the tax. That's the reason they gave when they taxed it. Refining complexities, environmental regulations on diesel and heating oil. There's demand imbalances. So diesel's demand is more flexible than gasoline's. So this is why I said earlier, manufacturing has to bump up in order for crude to spike, because even though you only get about 11, 12 gallons from a barrel of diesel and distillates, you get 20 to 21 gallons of gasoline. So most of it still goes to gasoline, even though it's not the entire barrel. So diesel demand, if manufacturing slows and the consumer slows, diesel's demand will drop. That won't necessarily affect consumers who still have to drive to work, still have to drive to the grocery store. So it's more elastic. So they will actually push gasoline out to the public before diesel. That can actually lead to diesel shortages. Then, of course, the cost of storage. When you're getting a lot of crude oil out of the ground, you've got oversupply, you get storage on diesel. So there's a lot going on with it. We export quite a bit of diesel too, and the regulations are even worse in other countries than they are here for diesel. So that's why that develops, but I can't speak to how wide it should be or how wide it's been.
But it's unusually wide right now between RBOB and diesel.
Usually when crude collapses the way it has this year at times, the spread widens with those particular products quite a bit faster than it does with gasoline.
It's interesting. Let's take a quick time out. Luis, will you put the banner up real quick? This is the part of the show where I ask a favor of all our friends who watch this show. Please try Tradier's Tradier Pro for 3 months for free. All you have to do is scan that QR code. 3 months for free. We talk to options traders who've been trading for decades, who've been trading for days. All of them say that Tradier Pro is the deal. It is a great, great system. Please give it a go. And that is the favor we asked today. Back to you, Bob.
Yeah. So the other one is that, like, Widge mentions in here that heating oil is untaxed, and he can't ever remember a heating oil price at $1 premium to the price of after-tax gasoline. I don't really look at heating oil. I never trade it. I rarely look at it. But again, we are in the winter season. That may have something to do with it. I'm sure you think about that because he's in a place where heating oil is used. I'm not in a place where any heat is used for the last 5 years.
I'm natural gas. I'm in the natural gas Midwest.
Yeah, I honestly don't know. A lot of people who use heating oil to heat their homes actually prefer.
But in the upper East Coast.
Yeah, they actually really prefer it. I know Widge is one of those guys. But again, I'm not really sure why that would be worse now, because you get these seasonal and weather-driven demand spikes. Could be because it's a cold winter, but the fact that Widge is an older gentleman, and I don't mean old, but he's not 20. He's
Right.
seen a lot of these and has never seen it this wide. I honestly don't know why.
Yeah,
Maybe there's bottlenecks at the refineries. Could be.
Okay, back to
Well,
you.
anyway.
You, Bobby, you got the question?
Yeah, that's it. That's all we got so far.
So,
I got a question. Yeah.
So
going back into the thesis for next year, how do you think the Fed plays in, Dear? Do you think, first of all, we're going to get a new Fed chair, I guess in May, right?
Yep.
Who's it going to be in your view? And then how's that going to affect anything? I
think just call him Kevin, the new Fed chair, Kevin.
Yeah, Kevin, the new pod. We're just using that as a fictional name. It has nothing to do with Kevin Hassett, but
or Kevin Warsh. They're both even odds now. Yeah.
I mean, I don't think that it will do a whole lot. I know that people have kind of been, they believe if we get Hassett's going to come in and challenge the independence of the Fed, and it's going to become politicized. But again, I mean, the Fed is essentially like it's absolute democracy, almost, in the sense like, Hassett cannot make interest rate decisions by himself, right? Like all voting members on the federal, like the FOMC, must come to a conclusion that is then followed, right? And so it's like, if nobody else at the Fed believes that we need to cut rates next year, well, no matter how, dovish, let's say, Hassett theoretically is, if the voting members vote against him, like, they're just not going to change Fed policy next year. I mean, right now, markets have by December of 2026, 58 basis points priced in. So essentially we have 2 cuts priced in as it stands now. And so, I think that we probably only get one. I would most likely agree with the Fed's dots at this point. Granted that growth stays where it is and the labor market doesn't weaken much further from here, which I don't particularly see. And so, I don't think that Hassett's really going to make a whole lot different.
So it's interesting. So you said you think that he would politicize the Fed, but then I thought of people on the Fed like Lyle Brainerd and people who are clearly were appointed by the Democratic Party and do seem to have their interest in mind more than they have your interest in mind. So it's already politicized, right? So, but I like what you're saying about we don't need I hate a unified, unanimous Fed. There should be difference of opinions, right?
Yes.
Yeah.
And I think that that's what we're seeing now, right? I mean, we keep seeing like essentially historic dissents, right, within the Fed. And I think that that goes to people's, actually trying to be pragmatic. And personally, I don't think our economy needs lower rates, right? Like, I mean, about a month ago, we got data from Germany, like Europe's in the tank. We got data recently from Canada. Month-over-month GDP was negative 0.3%. So like all of these other people, essentially in the G7, are in a bit of a lull at this point, and the United States is the only nation that I would argue in the G7 that is consistently printing higher than expectations on GDP and hasn't seen rapid deterioration in the labor market. And so I don't actually think that we need lower rates. And obviously, at the end of the day, I mean, it hasn't hurt the consumer too much, right? I mean, if you look at Redbook, what that printed 7.3 or 7.4, was in the sevens. And so overall, like, consumption remains strong. It continues to beat estimates. It continues to beat people, beat out the economists who thought that the economy was going to be in the tanker and that the consumer was going to be devastated from where rates are. And overall, it does seem like companies like CapEx has backed off a bit, but companies are still spending. And so, like, I don't actually think that we need lower rates. The economy seems to be fine at this point. So I think.
So my backup question to that is that because I've been arguing people about this for decades, literally, is that the oversimplistic view is that the equity markets want and demand and love lower rates. That's not true. What equity markets really want is rates that are lower or going to be lower, where we believe the actual economic conditions should dictate those rates to be. Meaning, if we're in an expansion and they're still lowering rates, well, hell, that's great for equities, right?
Yeah, I mean, I feel like that was sarcastic,
No,
right?
yeah, yeah, hell yeah,
Yeah,
it is,
but
right.
yeah,
But
no,
again,
no.
because if rates are going lower, but we're getting into a cataclysmic sort of economic event, well, the markets don't like those lower rates. Those lower rates are
Lower rates,
reflecting
yeah.
a shitty situation, Bobby.
Yep.
Question from Widge again, for you, dear. That sounds weird when I say
It
that.
sounds weird when you say that. Yeah,
For
right.
you, my dear. Macro work requirements for benefits are coming. Immigration reversed. What's the net impact of a flood of American workers with poor work histories hitting the labor market on unemployment rates and wages?
By the way, before you answer, my dear, will the St. Louis Fed just put out a piece yesterday that talked about with the changes in immigration, many more native workers are coming into the workforce and taking those jobs. So it's already begun. But I'm interested to hear Deer's perspective on it.
Yeah, I mean, will there be some upward pressure on wages? I think that it's hard to say because even if we're to look at immigration overall, the people who are essentially getting those jobs, obviously, the vast majority of them, if they were here illegally, would get paid a much lower wage rate, but we would have no way of knowing how that actually affects incentives, right? Because it would all be done on the black market. And so, if the going wage was 20 and, now they were paying somebody 7 or 10, well, that doesn't really do a whole lot to the overall wage rate. I think that it would affect companies more than it would the wage rate. The wage rate's going to be the wage rate. But I think overall, this is going to be a net benefit, I think, for employment. I think that employment's going to get stronger. It's obviously going to allow for more skilled labor in the labor force. I've even heard of places out in Oklahoma now that have massively bumped up the wage rate. I think that there were some steel factories paying people like $47 an hour for native workers to come and work in some of these steel factories. And so, I mean, I believe that at most, wage rates are probably going to adjust somewhat higher just as a function of trying to essentially get demand for labor at that going wage. But I do think that this is probably going to help people in the kind of the blue collar jobs actually have massive wage gains that have
Love it.
not been seen as much as what you've seen in white collar jobs, right? Like if you look at what people, quants are making, or if you're looking at what some of these guys out in, Silicon Valley were making, like those wage rates have just gone absolutely parabolic. And I do think that this is going to help lift blue collar workers, but I don't think overall it's going to be a long-term adjustment. At some point, wages will readjust once things kind of come back into equilibrium.
So from Remo, what is your view on the dollar and rates? Now you touched on that a little bit about you think rates will probably go lower or need to go lower on the short end, but I don't want to put words in your mouth. So just sort of give it to him again.
Yeah, I mean, I think that we're going to have a much steeper curve. I'm looking at twos, tens to probably be somewhere in the ballpark of, 115 to 120 basis points. I don't think that that's out of the picture. I do think the dollar might get a bit of a boost here. I mean, this year it hasn't done fantastic. What's down 10% almost, I think, since the beginning of the year. Um, but I do believe that if our weights kind of stabilize, obviously interest rate differentials will kind of have more of a clearer picture where that stands. And I do think that that'll probably lead to a bit of a bid for the dollar. Um, but just kind of the uncertainty of forward guidance. And then, even before the December meeting, Powell saying, well, we might not cut. You've just seen interest rate probabilities, but pretty whipsawed on how many cuts or are being priced in or being priced back out. So,
Can I add to a question on that? Were you shocked that this year that the euro, starting back in spring, started going through the roof when all the problems and challenges that face the eurozone compared to like the dollar? Like if you just took away the charts and gave me the fundamental arguments for each country, and Donald Trump says that $21 trillion of investment are coming from abroad into our country. It's Donald Trump. So if he says 21 million, probably the real answer is about 21 trillion. Probably the real answer is about 8 trillion based on the Trump deflator, which by the way, is still significant. Don't you think that just based on that, the dollar should be outperforming the euro?
Yes, I definitely do. I mean, I've been surprised by euro, and the euro
Same.
strength. I think some of that had kind of been broad-based repatriation.
Was also because I was going to Italy in May, so it rallied literally 16% in the 3 weeks before I went. So that was part of the reason that the euro went higher.
Yeah,
But anyway,
well, exactly, and it was like when the euro started to rally. I think once it got legs, people who were essentially invested in U.S. equities, but from Europe were like, well, like this is killing our purchasing power, right?
yeah.
And then a lot of that got repatriated back to Europe, and then you saw, the stock 600 or even the DAX have just an absolutely stellar year. I mean, kind of compared to where it had been over the last 10 years, right? Because people were always like, look at Europe, look at the valuations in Europe. Europe's super attractive. That hadn't worked for a long time. And I think that there was kind of that compounding effect, which just kind of continued to allow for repatriation back into the euro, which just continued to allow the euro to get a bit. I mean, the fact that we're sitting at 117 now, I still think is ludicrous.
So do I. Good.
So
That's what
yeah.
that's what I thought you were going to say. And that was going to be my follow-up question because I will be looking at the chart hard in Q1 to find an entry point to short the euro. I think that's going to be one of my trades of the first part of the year.
And even to that, I mean, like sometimes like this is the thing about markets. It's like, you're looking at the ECB. I think essentially probabilities are for the ECB to essentially be done. Yeah, like expectations is for them to essentially be around 2% out into 2026. And it's like, well, if they're at 2
And we're at
and we're
3.
at 3 or 3.25,
Doesn't favor
well, like there's a huge, like, I mean, there's a decent yield pickup there relative to what you would be getting in Europe. And, it's like, well, and then you look at the Swiss. I think the Swiss, they're at 0, and the anticipations for them to maybe even go 0.25 by, the end of
Bobby,
2020.
Bobby, your question, and particularly if it's about Japan. But anyway, I'll ask about Japan in a second. You go.
No, I really only got two more questions. One is a market one, and then one is kind of a bullshit one. Um, where do you think we are in the business cycle? I mean, obviously, I shouldn't say obviously, in my opinion, a lot of people I've talked to, the business cycle really is the overall driver for what stocks do if they go into a correction or a small bear market or whatever. Where do you think we are in the business cycle?
I actually think that we're kind of just in I don't know, maybe the fourth inning of the business cycle.
Okay.
So I think that we're in a reacceleration. I think that this has been the big problem with a lot of people, you know, that have kind of TDS is they came out and they thought that the economy was going to get absolutely obliterated, that, these tariffs were going to cause this huge increase in the price level. And overall, I mean, I think that a lot of this is working. And so, yeah, I think
So,
probably third, fourth inning of the business cycle.
okay, so here's sort of why I ask you that question. I'm sorry to interrupt you. If you weren't done, forgive me. I don't want to be like the people. I mean, I would have voted for anyone over Kamala Harris. I obviously voted for Trump. What I don't want to do is I don't want to see this administration doing the same thing that the last administration did, where they said, no, you're not really suffering. Look at the data. I don't want to see that happen. That's why I asked that question, because if we're in the third or fourth inning of the business cycle, and by the way, I agree with that assessment. It's a bit before the people who are complaining the loudest start to feel it, right?
yeah.
Okay.
And I mean, and even myself, like I would consider myself more of like a Reagan Republican. And like
Yeah,
even
agreed.
now I would probably be like more of a libertarian. And like to be quite honest, there are things that the administration's doing that I don't agree with. Like, the potential of handing out $2,000,
Yeah.
dividend checks. It's
That's
We've
like
derailed out of that.
it's like, well, now we're kind of headed back to, and I think we can all agree, like Trump isn't. I would argue he isn't a social conservative, and he's not a fiscal conservative. But
not
like,
at all.
he wouldn't be like Ronald Reagan or even the Bush. I mean, hell, when 2008 was happening, and Bush was in office, and they were like, we need an $800 billion stimulus, which is like, now peanuts.
Yeah.
Like, Hank Paulson had to go begging on his knees to Nancy Pelosi to pass it in the House because the conservatives were like, no, like this is socialism, right? Like we
And you
cannot.
remember what happened, by the way, when they didn't pass it the first time and the stock market just took an absolute caning and got destroyed. And they were all like, oh shit, the stakes are higher than we thought. That's the way you remember it too, right, dear?
Well, I was 12 when that happened, so I
Oh,
don't.
Jesus, Mary and Joseph.
but,
Hang up on him.
but yeah.
I was old when that was happening already.
But I mean, I do think that some of those things, it's like that's where I think that, I wish some of that would kind of be reeled back a bit. It's like on the spending, like,
Yeah.
But
Yeah.
besides that, I mean, I think the overall economy is fine, and he's surrounded by smart people. Besson's been successful. I mean, Stephen Myron has also been very successful, and so I mean, I think that he's been surrounded by good economic um, thinkers who are kind of helping steer him on the right path. But again, not every single policy do I agree with, but that's politics.
Yeah, I just hated when we saw, the first 3 weeks of the presidency, people going, eggs aren't down. It's like the
What are you
seat's
talking
barely
about?
warm.
And then they're
And
like,
again,
he said he'd reduce egg prices on day one. God almighty, that's just what people say. Okay.
yeah, I
But
mean,
anyone who takes that shit seriously has to get their head examined and then get it examined again. Yeah.
it drives me crazy when you hear that stuff. And then it's like, as we mentioned already, I don't remember who said it, might have been me. The US economy it's a freaking cruise liner. It doesn't turn on a dime. But also, I would like to see them say shit like that. It drives me crazy. I'm like, this is the best economy we've seen in forever. No one's ever
Getting
seen
even
it like
better
this.
still, Bob. And I hate to compliment you, but your Trump impersonation is getting there. It's good.
I just saw somebody post something on Twitter from the Federalist said, can we end the Trump
No.
impersonations in 2026?
No, we cannot.
Please, no. I
No, we
think they're
cannot. I will not
wonderful.
agree to those terms.
All right, you want my bullshit question? Or you got another serious question?
I have no serious question. Ask your bullshit.
Okay, so our friend Deer Point is from the South, so he's a college football fan. I'm going to give you 3 games that are coming up. You pick a winner of any or all 3 of them, okay?
Okay.
Tonight we got Miami, Ohio State. Tomorrow we got Oregon, Texas Tech. And then tomorrow we also have Alabama, Indiana. What do you got? Any or just one of them? I don't care.
No, so I think tonight Ohio State beats Miami.
That's the
I,
easiest one, in my opinion, too,
I,
dear.
I
Yeah.
think that that's in the bag. I hate Alabama so much. So I got to go with Indiana.
Last one's Oregon, Texas Tech.
Texas Tech.
Okay. You guys heard it.
Yeah. I mean, because Oregon's game against Washington was pretty brutal. Like they didn't perform the way that I thought that they would. And then we have Georgia as well, and obviously got to go with the Bulldogs.
So I usually go with the Big Ten on everything. The Indiana-Alabama game is the most intriguing one because Indiana, I think we all agree that we've been watching sports our whole life. Can you compare anything to Kurt Signetti coming to Indiana and taking the losingest program in FS1? Is that it? And then all of a sudden making them a machine in like 2 years? You've never seen anything like it, right, dear?
Nope.
No. So I want to see.
Congratulations, Jimmy, on Illinois yesterday. That was
did you watch any of that game? It was a nice game.
I watched all of it. All of it.
Yeah, Illinois, again, Illinois is good. When they told us at the beginning of the year that Illinois was top 10, even the Illinois faithful like myself thought that was bullshit. You know what I mean? We never believed it. And so now this is, top 20. That's about right. Yeah.
Yep.
But to you as well, Widge, thank you for everything you do for us. I hope you have the greatest New Year's ever.
Jan 2nd, got to go with Wake Forest because was my alma mater. So,
that's a hot take.
That's hot. Wake against 2.
They're playing Mississippi State.
Mississippi, I think, right?
But I mean, Wake beat Virginia this year.
Thank you, Dylan. Wake beat Virginia.
Jimmy, that's one of those Lubin ones you were talking about. We won't talk about it though.
Almost beat Georgia Tech, so they've been strong.
Anyone want to comment on silver before we?
Well, no, that I got out of about a quarter of my silver position. I've been beating the silver drum for several years, and this year beating it more rapidly. But things are getting crazy, obviously. So I did, when I got out of a lot of it, I bought some cheap call spreads just in case it keeps running higher, and I do have a good amount of it. But again, I think the silver market got to WTH, WTF, whatever moment. So I had to be not as much part of it. I'm still heavily long silver, but what it's reflecting, I guess that's a whole nother show. You, dear, got any closing thoughts?
No. I mean, I think that kind of summed it up well.
Good. Okay, so that's Steer Point Macro. If you don't follow him on Twitter, he posts a lot of great charts and a lot of great information. There's so much less like bullshit like some people post, like myself, and just to irritate people. Sorry, it's what I do. I like to steer the pot. It's funny, but follow Deer Point Macro. By the way, the message for you guys too, I love this show because I love the live element of it, and the people who we've become friends and friendly with on this show, we treasure those relationships. You guys are the best. Anyone who's been a contributor to this show, we appreciate it a ton. I want you guys to have the greatest, safest New Year's ever. I'm Jim Iuorio. That's Bob Iaccino. That's Griffin or Tahir or Deer Point Macro or whatever the hell you want to call them. This is the Tradiers, the Trader's Edge.
You know how the financial world goes. Here comes the buzzkill. Please make sure to take some time to read this boring disclaimer. We will owe you one.